Bitcoin emergency update. We've got a little bit of a rally, but don't be fooled. The probability is still that we're going to make a lower low before we see a potential big trend reversal and then possibly go on to see all-time new highs. So if you like today's content, like, subscribe, hit the bell notification because we're going to dive in deep. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. So that's a picture of my wife in the background. It was a 10-year anniversary, and what I want to focus on today is Bitcoin. Right, let's go into Bitcoin. I'm going to just reduce the size of me very quickly. All right, so this is the macro thesis of Bitcoin that I've been really looking at from the perspective of Elliott Wave and Fibonacci, one of the best ways to read the market. 1, 2, 3, 4. Well, 3 and then an ABC of a potential 4. But we've had this movement to the upside. Initially, it looked like a trend reversal, but because we made a lower low or into a particular range, this now looks like we're going to go into this range over here. So today we're going to zoom right the way in, zoom right the way in, zoom right the way in. I'm really going to pay attention to this part of the market, over the next couple of weeks, next couple of days and weeks, this zone over here. Very important zone. So there's a few things that we need to be aware of. Yeah, we said this the other day. This now looks like an A, B, C correction, right? Because we had this big move to the downside. And then is that we've got this little rally. And we're going to look at this today because, most people are going to confuse this to be a high probability movement to the upside, which it could be. It could be looking at a different thing, but the probability will be that we're going to make a lower low, and I'm going to show you why. So when we do an ABC correction that's relatively clean like this, looks like a nice ABC, there's this thing called external retracements, which is this zone where the next price movement tends to go down to making a new low, right? And we're talking about the range of 32,000, 32,500 to 29,000. That's going to be scary for the market, and it will retest this previous low, what we're calling a wave A, and it might exceed it. That's not overly important right now. But what we want to look at now is, okay, we've had this movement to the downside, and we've got this movement to the downside, and we've got this rally. What is this rally? Does this have an impulsive structure or does it have a corrective structure? That's really important. So I want to just jump into my Elliott Wave course. I built a whole course to go into real layman's terms, and there's a particular sequence. I think it was the Elliott Wave basics that I wanted to really cover. Lesson 2. I just wanted to show you this visual. There's a particular visual. Let me see if it's on this lesson. Yeah, it is this lesson. Right, this is what I want here. Keep going. Let me find it. No, just here on it. There we go. Bang. That's the visual. All right. One of the most valuable things with Elliott Wave is to know, is the market in an impulsive structure or a corrective structure? Impulsive structures have a 5-wave sequence and corrective structures have a 3-wave sequence, right? That's going to give us really valuable information. And by the way, if you want to learn more about Elliott Wave and Fibonacci, I've got a free Elliott Wave Fibonacci Masterclass. It's in the link below. If you like it, I've got a course. I've really worked hard on this course. It is now, well, it's usually $997. We're doing a 90% discount right now. It's £97. You get an invite to my private Telegram. We do workshops on the weekend, now also during the week as well. We're just giving a lot of value, especially during this time when the market is sideways to down. But the free Elliott Wave Fibonacci Masterclass is in the link below. So when I'm looking at this, I go, okay, this is a corrective structure, ABC. What is this looking like to me? Is it looking impulsive? Or is it looking corrective? So now what we're going to do, we're just going to dive in a bit. Now we're going to really zoom in over here. I'm going to use candlesticks because I like when we're moving into more micro data, sometimes it's helpful to see the candles. What I'm seeing is the following, right? I'm going to draw it like this. I'm seeing a wave 1, a wave 2, a wave 3. And I believe what we're seeing right now is a wave 4, which is a correction. And then we're going to see potentially going to see a wave 5 to test this area. Now, again, we can only do probabilities and never certainties, but we can look at the factual information to go, okay, what information do we have right now that will tell us what's more likely to occur, right? Never guaranteed, but what's more likely. All right, well, first of all, again, I'm going to jump back into my course because there's some important ratios that, if you're not used to Fibonacci and Elliott Wave, then, it's difficult. So we're going to jump into it's going to be the extension. I think it's lesson 16. Yeah, lesson 16. Fib price extensions for wave threes, right? This is important because then we can differentiate. Is it looking like a correction, or is it looking more impulsive, like a sequence, a new sequence? So wave threes typically, more often than not, like it's common for them to be 162% to 262% of wave one. So we can measure wave one. This is wave one. We project it from the low of wave two, and we literally project it forward, right? And this is where 1.618, which is 162%, and 2.618, which is 262%. This is where the ratios are. So this is what we're going to do and leverage this information on Bitcoin. So let's just do that exact thing, but on the downside. So we were looking at it from the upside, we're going to do it from the downside. So I'm just going to show it like this. I'm going to do 3 clicks. In TradingView, you use a tool called trend-based fib extension. Trend-based fib extension, that's the tool. So we're going to click on that. And what we're going to do is we're going to do 3 clicks. We're going to measure this, what we're calling a wave one, and we're going to project it forward from this over here. So it's going to be click, 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 and then we're going to get our ratios, and then we're going to select those 2 ratios, right? And then what we're going to see, 1, 2, and then 3. I want to select those ratios. We're going to select 1.618 to 2.618. So you can see that the wave got really close to the 2.618, right? We went really down, it spiked down, and now it's moving to the upside. So when it's 1.618 and beyond, that puts the probability in the edge in the favor is a wave 3. Now, if it's a wave 3 rather than an ABC correction to see higher highs, then we should be very wary that this movement to the upside is nothing more than a wave 4. Now, there's a couple of rules with wave 4. Again, I'm going to jump back into the course. I'm going to go back into Elliott waves. Because look, everything is difficult before it's easy, but we want the rules and the guidelines, but the 3 rules. So lesson 5, the 3 Elliott wave rules. This is going to be very valuable information because more often than not, you'll find this plays out, especially with crypto. So the rule that we're going to look for is, let me just pull this up. Wave 4 is rule number 3. Wave 4 cannot trade into the range of wave 1, right? So when we're looking at this, again, if you want to learn this in more depth, I literally got a free Elliott wave and Fibonacci masterclass in the link below. It's in the description link below. It will take you through a lot of this in high level. If you like it, you can buy this course. It's only £97, cheapest chips right now. We made it cheap deliberately, just because there's bearish market conditions and just want to help where we can. So when we're looking at this, we go, okay, wave 4 should not trade into the range of wave 1. So where's the range of wave 1? It's here. So what would invalidate our thesis, our thinking? Well, if this price does go into this range, then we need to rethink and go, oh, actually, it might be now looking to make higher highs. So we are anticipating that Bitcoin will not go above 41,000, just call it 42,000. 42,000 would be the extreme. So then we want to look at, again, I'm going to jump back into my course. I'm going to go back into Fibonacci. I just want to go into the Fibonacci, and I want to go for the basic retracements. It's in the foundation phase of this, is the Fibonacci foundation. We want to go for the wave 4 retracement, which is lesson 5, how to do a wave 4 retracement. One of the key ratios, and the key ratio that I'm looking for is the wave 3, like the measurement of the wave 3. So it's this one here. So we're going to do this now. We're going to do it together. Just so you see the power of this. It doesn't mean it's going to play out like this. It just means it's highly probable. Typical is 38 to 50% of wave 3, right? Of a wave 4 correction. But again, we're looking at it on the upside. We're now going to just flip it over, and the same is true on the downside. So, okay, so let's just get rid of this. All right, back into Bitcoin. So what we're going to do, this is our wave 3. This is what we're calling a wave 3 down here. Now we have to make a judgment call. Do we take the close as the low, or do we take this as the low? Now, in this scenario, to be more conservative, I'm going to take the close as the low. And sometimes it's easier if we just use the line data so we can see it like this. And then what we're going to use is we're going to use this retracement. So there's 2 clicks here. There's high to this low. And those key ratios that we want are 38 to 50%. Now, a maximum is normally 62%, which is above that wave 1. but we're just going to focus on what's most typical and most common is 38 to 50%. So what we should anticipate is that Bitcoin will move up to the upside between 39,000 to around 40, 41,000, thereabouts. That's most common. And now we're going to move something into the momentum. I'll talk about this in the course as well. We won't jump in. But what's probably going to more than likely occur is that the momentum, one or two more days to the upside, will probably get a bearish reversal. And more than likely, it will coincide with a potential wave 4. And if you're taking a short position, if you're trading Bitcoin, this is where we'll look to trade short on a short-term time frame for a wave 5 to the downside and exceeding this potential low over here. And there you have it. That's the art and the science of Elliott wave and Fibonacci. This is the zone. I'm going to draw a box for reference. There's a few other things we could do, but this is more than enough information to say, okay, for the next 1, 2, 3 days, sideways to up until we get a bearish reversal, as long as it doesn't trade into the range. Like, I would love it to trade into the range, by the way, just so we're on the same page. I would love it to go like this and invalidate the whole count and then reevaluate everything. But again, we can only go with probabilities and never certainties, and we just go with the edge all of the time. I think that's what I wanted to cover with Bitcoin is, people asking, what's this rally? Are we gonna, is this the beginning of a new trend? I go, it's not enough for us to be confident that it's going to do that. It will need to trade into this range, and it will need to break this high for us to really take it seriously at this stage. But the probability right now is 1, 2, 3, making a wave, potential wave 4, and then another wave 5. And then we reevaluate here to see if this is looking like the end of the trend, and then a big reversal. And it might be quite aggressive to the downside because of fear, uncertainty, and doubt, keeping in mind that this is a major low. This is a, this zone here, if I draw it like this, is a major low zone. Like it's tested down here. It was tested down here, and we might exceed it for a typical wave C. It will end up being an irregular ABC correction. Irregular meaning that this wave B exceeded this previous high, and then this one exceeds the previous low. That's irregular. If it doesn't exceed the low and the reversal happens here, it's called a running ABC, which is more of a bullish sign, and then we'll end up seeing higher highs being made. So there you have it. There's my thesis. My thinking on Bitcoin is logical, it's mechanical, it's non-emotional. And if you want to learn how to do Elliott wave and Fibonacci wave counts, the ratios, the momentum, and you get this confluence of events, so you're always working with the edge. Take my free Elliott wave and Fibonacci masterclass. If you like it, you can buy my course. It's £97, 90% discount, only $997. You'll get an invite to my private Telegram. We do workshops on the weekend. We're doing a couple today as well. We got one today. We did one Wednesday. We're just adding a lot of value. We just launched our Discord channel for our private group as well. So we're just getting more timely information so we can prepare. So if the operative word is if, it's not guaranteed. If we do get a trend reversal when the market optimism is there, we need to be ready for it. And right now, everyone's being challenged. Everyone's been tested. How much do you believe in this and hodling through? But from a psychological standpoint, before a new trend reversal, the news is the worst. The fear is normally the worst. And then if we do get a movement to the upside, wave 2 is a retest, but it also tends to act as the launch pad for a wave 3. And that wave 3 is where that real optimism comes in. It's the strongest, longest, most impulsive wave. And that's what we're waiting for. And that's when the whole market will go. Now it's obvious we're in a new trend. And that's what we're really, really looking for. So like, subscribe, hit the bell notification. Let's finish on a quote. Let's go with chapter 4 from my book. The chapter is actually called Don't Buy Into Your Circumstances, because circumstances can be real, but the thought, like the mind process, the thought process, you can not buy into them and succeed anyway. So let's finish with this. Benjamin Franklin. He or she who is good for making excuses is seldom good for anything else. I hate excuses, even though sometimes the legitimate excuses, right? It's like, look, just get it done. Just get it done. Let's just work harder. Let's wake up earlier. Let's watch less social media, apart from my YouTube channel, obviously. Watch less Netflix, and let's double down on Elliott wave Fibonacci. Let's hedge. Let's do risk management. Let's become risk-free and apply this high probability thinking time and time again. And it takes a lot of practice. So just be careful of excuses. If you're the excuse person, it's always coming to excuses. Just look in the mirror and go, hey, we can flip the switch. And if you're the guy that always and the gal that's always looking in the mirror and going, I have no excuses. It's me. I take full responsibility. then you got a winner's mindset. And we want that. We want that. We want that. So in this game of crypto tennis, let's win. Let's stack the odds in our favor. Again, today, look, it looks like to me, I hope this is where, this is where you go, I hope I'm wrong. I don't want to be right, but we just kind of got to look at it from an objective standpoint. What is the psychological mood that literally is going to be the direction of the trend, because it's all based on fear and greed, psychological mood. And right now, wave fours, that looks like a wave four to me. Looks like a wave four forming to me. It doesn't look like a trend. But we also know if it trades into the range of what we're calling a wave one, that invalidates the psychological mood. And then it goes, oh, did you get? It's looking more optimistic than anticipated. All right, let's reevaluate. And now let's look and just do some psychoanalysis on the price data of Bitcoin, which is going to influence the rest of the markets. All right, guys, I will see you very, very soon.